CBC Marketplace has once again done the hidden cameras in the 5 major banks, and the findings aren't too surprising to myself. I mean, they did this video about 7 years ago. They've redone it now and not much has changed. Am I surprised? Absolutely not. But in this video, I want to go through the article, through the videos, and share my insights to make sure that this doesn't happen to you. How do you protect yourself? I want to help you through this video. Before we jump into it, I just want to say thank you for the 100,000 subscribers. Got my plaque the other day here, put it up in the office. Just want to say thank you. If it wasn't for all of you that watch the videos, that contribute, that leave comments, that support each other, this channel wouldn't be possible. And I know it's helping a lot of you and I appreciate it. If you have ideas for videos that you want to see, leave a comment below and we'll try and get it into the schedule. I'll link this article below as well as the videos that are on YouTube. Again, the videos had hundreds of thousands of views within the first few days, and I'm not surprised. And a few of the things that I've seen in here, right off the top in the article, TD employee says she's usually not acting in the best interest of her clients. She's trying to sell them products that will help her meet her targets. Again, that's a huge issue. As you walk into a financial institution, you expect that they're doing the best for you, that they're supporting you, that they're giving you the products that you need. But again, that's not happened. Again, they were scared to lose their jobs. Now, again, this was done at Scotia, TD, BMO, RBC, and CIBC. So they're hitting all the major banks. So again, this has been done before back in 2017. Same kind of idea, went into the public banks with the hidden cameras and found a lot of awful things. Here's a shocking stat after the 2017 investigation though. Over the next few months, more than 3,000 current and former employees from all the big banks contacted CBC to speak out about sales pressures, resulting in an investigation by the FCAC. Now, the FCAC issued a report in 2018 that found a focus on sales target was increasing the risk of banks placing sales ahead of interests of customers. But again, 2017 investigation, 2018, here's a report, 2024, we're still in the same situation. Surprise, surprise. Now in the investigation, they go through many things. And so again, the hidden cameras, it was increase your credit limit. It's, you can move to this banking product and it's absolutely free. Well, it was only free if they kept $6,000 in there. Again, they're being upsold things consistently. And again, when you get upsold and you say yes, they get kind of a point value to it. And they have to hit so many points a month to hit their targets. So they're always trying to upsell, upsell, upsell. Could be a debt product, could be a credit card, could be some sort of investments. Now, for me on the financial planning, retirement planning side of things, this didn't surprise me. But what did surprise me is this. When they're going to the banks and talk about mutual funds and investing, of the 5 major banks, only one of them gave somewhat accurate information. That means 4 of the banks were giving false information around mutual fund and mutual fund fees. So in the video, they did a hypothetical solution where someone received a $50,000 inheritance. They went to the bank, they had $17,000 as a credit card, and they said, I have this money, I have a credit card debt at 19%, what should I do with my money? And they were saying, pay off some of your credit card debt, but invest it. In fact, one of the banks was saying, you're going to get 10% or probably even higher, guaranteeing a rate of return on a mutual fund, which is absolutely no. You can't do that. You can't guarantee that. So terrible advice. But again, as the end consumer, you go into these big banks to trust them. You've built that trust. It's being broken. And so they were saying, guaranteed rate of returns. The fee is only on gains. So if you put $50,000 in and you make, $5,000, you're only charge fees on the gain. And of course, you're charged fees on the whole amount every single year on a monthly basis. Or on a daily basis. That's just how it goes. So really bad advice. But again, you watching this video, if you haven't done your research and said, this doesn't sound right. These hidden cameras need to happen more often and change needs to be made. Again, it was done in 2017, it's being done again in 2024, and we're in the same position, if not a worse position than we were 7 years ago. So what needs to happen to make change? Well, we need to keep moving money out of the banks. Our firm, we deal with a lot of clients on a daily basis, and a lot of them are moving out of the banks. Now, where are they moving? They're moving to independent investment counsel firms. They're doing more DIY, more hybrid stuff. We've moved some clients to steady hand, which is another option. There's a lot of options out there outside of your big banks. Here's a few tips for you as you go forward, because you're going to read this article, you're going to watch the YouTube video, and you're going to say, oh, Adam, like, I don't trust anyone anymore. Like, what do I do? And the reality is you need to do diligence on the person that you're dealing with, not the bank or the financial institution, but the person that you're actually talking to face to face. Are they registered? What's their experience? What courses have they gone through? Do they deal with clients like yourself? Again, we have clients that come to us all the time and says, Adam, I had a plan done by my advisor, but they had no idea what an RSP meltdown was and when to take CPP. Because they don't deal with retirees. They deal with the accumulation phase, and they've never focused on retirees because guess what? Retirees draw down their money. Most advisors don't want to work with retirees. And so that's our specialty. We work with retirees. We love doing it. That's our bread and butter, building retirement plans for Canadians. So find someone that fits your specialty. What are you looking for? If you're going to walk into the bank and expect good, solid, sound advice for you, it's never going to happen. I can say that. I've been in this business almost 20 years. I've never heard great stories. And then when you see hitting cameras like this and see it firsthand, I'm going to say, it doesn't surprise me. And I think it's going to continue to happen. The big banks have a lot of pull in our country. They have a lot of political power, and I just don't see much changing. So what needs to change? Well, you do. You need to move away from the banks if you're not happy. Review the advice you're getting. Review the products that you're invested in. Review your debt arrangements, your credit cards, everything that goes on in your financial world is on you to review. This video I'm doing here is to show, look, there's been due diligence done on your behalf. Hidden cameras gone into all the big banks, and it was the same story again in all of the banks. So there's the proof. It's now on you to make change. The banks aren't going to change. It's going to have to be you. So if you're someone sitting there saying, yeah, I invest at, one of the big banks, it's gone okay, but okay, well, investments, they've done okay. How has the advice been? Has it been deep level advice? Who's putting together your plan? Are they qualified? Do they do this on a daily basis, or is it like part of a million things that they do? These are the things you want to dig into. There are better solutions out there more than likely for you. If you're not happy, look for a different solution. Contact our office. I'm not saying our office is the best solution for you. I'm saying reach out to me. We can set up a 30-minute call. We can go through your situation, and I can point you in the right direction. But it's time to change. Time to do something about it. A lot of you are getting close to retirement. You've dealt with, the major bank for 30, 40, 50 years. I remember as a kid, I had a Leo account. I dealt with RBC, had a Leo account. That was popular back then. Went in every week, had my little Leo book, had my balance on there. Obviously, those days have moved online, but that was my experience as a kid. Now, as I grew up, I realized, hey, this probably isn't the best option for me. I've gone elsewhere for my banking and everything else. But a lot of you haven't. You haven't made that change. And some of you, hey, you're happy, it's working for you. It is what it is. But for majority of you, you put blinders on. You said, well, I trust the big banks. I don't know after you watch these videos how much trust there can be in the big banks anymore. But the biggest thing at the end of the day that you need to take out of this is that when you go into one of these big banks, based on this video, you're not getting the answers that you should be getting that are best for you. You're getting the answers that are best for the big banks and not for you. And that's costing you money, and it's costing you a lot of money. So open up your eyes, look at other options out there, make sure you don't have your blinders on, and take a few minutes to watch this video, read the article, and see what's happening out there. Because I think you might be surprised if you've never heard this before. So thanks for joining us in this video. Again, thank you so much for this. I really do appreciate it. This means a lot to me, for all the views, for all the followers. Let's keep it growing in 2024 here. And we will have, again, 2 videos like this out every single week to help you guys make better decisions, help you get to retirement in a better position, both financially and psychologically. So we'll see you in the next one.